Hey everyone, welcome back to UJXanti. In this series, we try to understand whether the current rally of Bitcoin resembles more with 2019 scenario, the bear market rally, or 2020-2021 scenario, the parabolic rally that we saw. In the last part, we discussed monetary policy, namely the interest rate decision of the Federal Reserve. And the interest rate decision is the most effective way to combat high inflation rates. That's the best tool that the Federal Reserve has in their arsenal. However, they also have some other tools. And today we are going to discuss the second most effective tool, and that is open market operations. Let's get rid of the drawings. Basically, open market operations is a fancy and traditional term. However, in the last few decades, analysts and economists started to use quantitative easing and quantitative tightening as the new alternative contemporary variations of open market operations. So we will use QE and QT. We rarely say open market operations nowadays. Let's incorporate the chart of Federal Reserve's balance sheet so that we understand what does open market operations mean. Basically, let's make it thicker. Here, let's go to monthly chart so that we can see the whole history of BTC, so that we can compare prior cycles as well. This is the chart of the balance sheet of the Federal Reserve. And we can see that sometimes it increases and sometimes it decreases. Basically, and we call those periods QT and QE. And what does the Federal Reserve hold in their balance sheet? Usually they hold US government bonds. However, there are some rare instances when they hold risky securities. For example, after the great financial crisis, the Federal Reserve started QQE, which is quantitative and qualitative easing. And by doing so, they purchased a lot of mortgage-backed securities from the commercial banks in order to save them. And they still hold some MBS, mortgage-backed securities, in their balance sheet now. However, usually they hold US government bond, which is considered to be a risk-free security. Here, when we have a drop in the balance sheet of the Federal Reserve, in the assets that the Federal Reserve holds, we call this period quantitative tightening, QT. And in this process, in quantitative tightening, the Federal Reserve sells securities to commercial banks. That's why in the traditional terms, we call it open market operations. So they sell securities in the open market. And in exchange, they collect money from the commercial banks. By doing so, they get liquidity out of the markets because they collect money in exchange of those securities. And by the way, that money just disappears. So by undergoing quantitative tightening, the Federal Reserve decreases the liquidity in the markets, in the economy. So in this process, they decrease the amount of the securities that they hold, the assets that they hold in their balance sheet. They give those assets to the commercial banks, and in exchange, they collect US dollars. By doing so, the economy has less liquidity. For example, in this specific quantitative tightening period, which started approximately in late 2017, we can see that the Federal Reserve started with $4.4 trillion in their assets, in their balance sheet. However, after 2 years approximately, they had approximately $3.8 trillion in their balance sheet. And that simply means that the Federal Reserve sucked out $600 billion from the economy. And by the way, that money just disappeared. That's how our current financial and monetary system works. And QE, quantitative easing, is the opposite of QT. Instead of selling securities, namely US government bonds, the Federal Reserve buys government bonds, usually government bonds. And in some rare instances, they buy some risky securities to save the big players of the market, usually the banks that are too big to fail during recessions. Here we can see the quantitative easing round that we saw during the COVID pandemic. And this was the largest QE round ever in the US history. And during quantitative easing rounds, the Federal Reserve buys securities from the commercial banks. And by doing so, they inject money into the economy. And that extra money, excess liquidity, finds its way into the markets and all types of markets. Equity, bonds, commodities, crypto. It's a boost for all of the markets. And crypto is not an exception. However, now let's concentrate on QTs first, quantitative tightenings. As we can see, in the short history of Bitcoin, there were 3 QT rounds. One was in 2012, and it was a short QT round. Then we had another one that started in late 2017 and ended in 2019. And the last one is the one that we are currently in, that started in early 2022. And it will be prudent to exclude 2012 scenario of Bitcoin because it was trading at $5 a piece. So it had a market cap of less than $50 million. And it was a tiny asset class back then. So we will concentrate on these two QT rounds, the one that we had in 2018 and 19, and the one that started in 2022, and we are still in it. Let's get rid of the drawings. Here is when it started. And here is when it ended in 2019. Now let's have a look at Bitcoin's chart. We can zoom in now. As we can see, during this QT round, at first Bitcoin was in a bear market. And then in the later part, we had a short rally. By saying short, I mean shorter than 2021 and in the previous cycles. It was only 6 months long. Actually, it was maybe 5. 1, 2, 3, 4, 5. Yeah, 5 months long. And when we come to the current environment, we see that QT started in February of 2022. And the picture is quite similar. We are not into QE yet, so we'll not draw another line. However, we can see that, again, in the first part of QT, we had a bear market. Continuation of the bear market because it started a few months sooner than the QT started. However, after that, we had a rally. So we discussed the scenario in 2019, then the current scenario. However, we need to discuss the other rally, the 2020-2021 rally. As we can see, we had quantitative easing in this rally. The balance sheet of the Federal Reserve increased, and it increased dramatically in 2020 because of the pandemic. And this increase resulted in this rally. It at least boosted the rally. And one of the components of a sustainable rally in crypto is that it should have an alt season. Even if it's a couple of weeks or a couple of months, there should be a short period of time when altcoins outperform Bitcoin, the general market of altcoins, not a few altcoins. In 2019, we didn't have alt season. Now, in this rally, which is almost 17 months long, we didn't have alt season. So Bitcoin outperformed the general altcoin market in 2019 and in the current rally. I know that there are many people that are not very interested in altcoins. They may only have Bitcoin in their crypto portfolios. However, altcoin performance or alt seasons are effective ways to gauge the market sentiment. The reason that we didn't have alt season here and in the current rally is that we had quantitative tightening and high interest rates. At first glance, it might sound illogical to view altcoin performance or whether there is an alt season or not in a rally if you're only interested in Bitcoin. So if I have Bitcoin in my portfolio and I don't have any altcoins, why should I care about altcoin performance or alt seasons? However, from a closer look, we may see that altcoins provide gauge on the health of the rally and also on the levels of liquidity in the market. That is simply because Bitcoin is the safest crypto that there is. And if Bitcoin outperforms the general altcoin market, it simply means that the safest asset has the most rewards, the highest rewards. So low risk, high rewards. Everyone will stick to Bitcoin. There is no reason to go to buy altcoins. If my altcoin has higher risk than Bitcoin and it provides less reward, why should I buy altcoins? I'll go and buy Bitcoin only. And if there are a lot of people buying altcoins, if the demand for altcoins is so high that it starts to outperform Bitcoin, it means that there is an excess level of liquidity in the market. And we know that altcoins are more dependent on newcomers than Bitcoin. That is simply because there are thousands of altcoins. However, there is only one Bitcoin. And Bitcoin has a strong narrative of being the digital gold. So there are a lot of companies and individuals that buy Bitcoin on a regular basis, no matter of the financial and monetary conditions. However, altcoins lack that kind of demand drivers. And it means that if altcoins start to outperform Bitcoin, at least for a few weeks, it signals that there is an excess level of liquidity and there are a lot of newcomers in the market. And that is what we saw in 2021. After this massive QE, this money went into all kinds of markets. And crypto was not an exception. And that's why altcoins started to outperform Bitcoin on this rally. And we can go to this chart, which is total 3. It excludes Bitcoin and Ethereum from the total crypto market. So basically all the altcoins divided by BTC. And here in this chart, we can see that altcoins underperformed Bitcoin in the QT environment. Here we have the QT part that started in late 2017 and ended in 2019. And interestingly, when the Federal Reserve ended its quantitative tightening and started quantitative easing around, it was the month of August in 2019. This was the exact moment when altcoins bottomed against Bitcoin. Before that, altcoins dramatically underperformed against Bitcoin. And after that, for 16 months, altcoins outperformed Bitcoin. Yes, we had a secondary bottom and it was much deeper than this one. But this was a local bottom for altcoins against Bitcoin. You want to buy altcoins when they are here. You don't want to buy altcoins when they are somewhere here. This is the time to sell. Thus, it is very important to compare the performance of Bitcoin with performance of altcoins, because if altcoins are not going to outperform Bitcoin, what is the reason to have altcoins in your portfolio? Because altcoins have higher risk than Bitcoin, and the only logic to have altcoins is that you expect them to outperform Bitcoin. So if Bitcoin is going to outperform altcoins, you will stick with Bitcoin only. And by the way, I'm talking about the general market of altcoins. I'm not cherry picking some cases. For example, Solana outperformed Bitcoin in the last year or so, but the general altcoin market didn't. So if you are a specialist in altcoins, or if you are lucky, you can, for example, select a few altcoins that will outperform Bitcoin on consistent basis. Good luck. It's very difficult and it may happen once, twice, but then the streak will just fade away. It will not go on. It's very difficult. If you have, for example, 10 or 20 assets, kind of diversified crypto portfolio, it's very difficult to beat Bitcoin's performance if the altcoin market generally bleeds against Bitcoin. However, if you select just one altcoin, and if you are good at selection or you are a little bit lucky, you have good chances to beat Bitcoin's performance and beat the general altcoin market, of course. But I'm talking only about the general altcoin market, not specifics. So here you want to buy here in this chart. It just shows us the performance of altcoins against Bitcoin. You want to buy here and you want to sell here. And we see that in this short period of time, which we call Altseason, it lasted only 5 months. We had around 300% of outperformance of the general altcoin market over Bitcoin. So here, in only 5 months, if you had like the general altcoin market, of course, not all of us have the same altcoins and it will differ. However, the general altcoin market outperformed Bitcoin for 300%. That is massive. So this is Altseason. And we didn't have Altseason in 2019 or in this rally. And if we zoom in and go to weekly, we will see something not very bullish. As we can see here, altcoins are in a descending wedge pattern against Bitcoin. And this doesn't look good. In sum, then, we can state that from the perspective of the monetary policy, namely quantitative easing and quantitative tightening, the current environment and the current rally of Bitcoin resembles more with 2019 scenario. That is simply because when QT started in late 2017, Bitcoin went into a bear market. And in the last few months of the quantitative tightening, we had a Bitcoin rally. Altcoins also rallied in USD terms. However, there was no Altseason in 2019 rally. And also, Bitcoin outperformed the general altcoin market by a big margin. And the story is very similar when we come to today's environment. When the Federal Reserve started its quantitative tightening cycle, Bitcoin was already in a bear market, and its trend, the bear market, continued. However, after that, Bitcoin started to rally. Altcoins also rallied in terms of USD. However, Bitcoin outperformed the general altcoin market by a big margin. And we see that 2020-2021 rally was, from this perspective, from the perspective of the monetary policy, was the exact opposite of the current and 2019 scenarios, because we had quantitative easing. And in fact, it was the largest quantitative easing round in the history of the US. And we also discussed the performance of altcoins versus Bitcoin, because if altcoins outperform Bitcoin, it indicates that there are a lot of newcomers to the market and there is excess level of liquidity. And if there is no alt season and Bitcoin outperforms altcoins like in 2019 and the current rally that we are in, it just suggests that the liquidity levels are not the same as in 2020 when we had quantitative easing cycle. And when you factor in the lags of the monetary policy, there is a high probability that there will be some problems in the markets, including crypto assets. That was the case in 2019 because of the lags of the monetary policy, both interest rate and quantitative tightening. These effects were visible even before the recession of the pandemic. And right now, Bitcoin struggles and it just crossed the $61,000 support zone. We need to wait and see whether this is a fake out or not. However, we just need to stay open-minded because monetary policy is important for all of the markets, including crypto. And if we have quantitative tightening and interest rates are at 5.5%, and it's already 1 year that the Federal Reserve stopped its rate hiking cycle, but they are yet to cut, the lags will be visible. And one might argue that the markets are still strong and almost all of the markets had their all-time highs in 2024, including Bitcoin, gold, Nikkei 225, S&P 500. All these assets saw all-time highs in 2024. So one might argue that the reason that markets are strong is that the US Treasury runs an expansionary fiscal policy. And that is something that may be related to politics because, as you know, the Federal Reserve is an independent body. They are not under the government. However, the Treasury is under the government of the US. So they work with the Biden administration. They are part of the Biden administration. And there is good chance that the Treasury had expansionary fiscal policy just because of the elections that are coming in this year. And when it comes to the question of when will the Federal Reserve end the quantitative tightening cycle and start the new QE cycle, history suggests us that there are two possible outcomes. The first outcome is if we have a recession, the Federal Reserve will be forced to end the QT round and they will be forced to print money and start the QE. And the second possibility is more optimistic. That is the scenario of soft landing. If the Federal Reserve can engineer soft landing, they will probably end the QT round that we are currently in, and they may even start another QE cycle. By the way, soft landing is the process when the Federal Reserve can decrease the high inflation rate to its target without any economic contractions and recessions. Right now, the inflation rate sits at 3.3% and the target is 2%. If the Federal Reserve can decrease the inflation rate to the target rate without breaking the economy, without any corrections or, economically speaking, recessions, in that scenario, we will call it a soft landing. This was the material that I wanted to share with you today. I hope you found it informative and interesting. By the way, please let me know in the comments whether you pay attention to macroeconomic indicators such as the monetary or fiscal policy, or you view crypto as something separate from the traditional markets as well as the monetary and fiscal policies. Please let me know about that in the comments. Thank you for watching and I'll see you next time.